Salin binti Jaswari, metric number S75814. So today, I would like to share a little bit about the company concept of Fraser and Neef Holding Berhad Company, or we call it as FNN. So let's go! FNN is a leading Malaysia company listed on Bursa Malaysia, over 141 years of experience since 1883. It's well known in the food and beverage industry, producing more than 200 halal certified products under famous brands like 100 Plus, FNN, Teapot, and also Serenona. So this company operates 30 factories, 11 in Malaysia and 2 in Thailand. It also exports 93 countries. Behind its success, there is a team over 3,700 started employees.
Hi, my name is Nur Humaira Nasuha and my number metric is S75725. In this section, I will briefly present the accounting framework adopted by FNN Holding Berhad. First, under regulatory compliance, the company complies with the MFRS Company ACT3123 Bursa Malaysia listing requirement and the Malaysia Code on Corporate Governance. This framework ensures that the company operates in accordance with legal and ethical standards. Secondly, in terms of audit and assurance, internal control and compliance are regularly reviewed. External audits are conducted by KPMG for financial reporting and Lloyd Register for ESG-related matters which cover environmental, social and governance aspects. Lastly, FNN adopts an integrated reporting approach which focuses on Cs such as capital, human, financial, intellectual, manufacturer, natural and social relationship capital. This provides a more holistic view of the company, performance and long-term value creation. Let's conclude the overview of FNN accounting framework. Thank you.
The next content is about accounting standard and policy, and I will explain about property, plant and equipment under MFRS 116. Fraser and Neef Holding Berhad follow MFRS 116 to record its property, plant and equipment. The company measures PPE at cost minus depreciation and impairment. Example, building depreciated over 10 to 16 years, plant and machinery over 3 to 15 years. Other assets like vehicle and furniture over 2 and 20 years.
We're going to explain about MFRS 15, which is revenue from concept to customer. Okay, the first step is identify the concept. FNN has clear sales agreement with the distributors and retailers. This concept outlines the quantity, price, and the delivery terms of goods sold, which satisfies the first requirement of MFRS 15. Okay, the second step is identify the performance obligation. In most cases, the company's main objective is the delivery of beverages and products. If any promotional item or service are included, they may be treated as separate performance obligation. Okay, the third step is determine the transaction price. The price agreed in the contract is fixed, but it may be adjusted for discount, only rebate, or promotional offers. FNN estimate this price based on historical trend and sales condition. Step 4 is allocate the transaction price. If the sale involves bundle item, FNN allocate the transaction price to each item based on the standalone selling price. This ensures fair and consistent revenue allocation. Step 5 is recognize the revenue. Finally, the revenue is recognized when control of the good is transferred to the customer. By applying MFRS 15, FNN ensures accurate, consistent and transparent revenue reporting across all its operations.
My name is Ainul Afita and my metric number is S75761. For the next slide, I will now present on intangible asset in according with MFRS 138. At FNN Holding Berhad, intangible asset include goodwill, brand, customer relationship and computer software. As of the end of the financial year, the group continue to report a significant amount of intangible assets in the finance position. A notable example in the acquisition of Cocoland, where intangible assets such as brand value and goodwill were recognized through the purchase price allocation process. These assets are amortized on straight-line basis. For instance, software is amortized over 2 to 10 years, while customer relationships are amortized over 10 years. Brands that have indefinite useful life are not amortized but are tested for impairment annually. This presentation reflects how the group applied MFRS 138 to recognize non-physical assets that contribute to long-term value. This slide presents information regarding MFRS 141 biological assets. For the financial year 2024, non-biological assets were recognized under MFRS 141. This is primarily because the FNN Agri Valley project was still in its development phase. The importation of dairy cattle was delayed due to the regulatory clearance issue. As a result, the company only received its first commercial batch of 2,500 dairy heifers on the 15th of April 2025, as reported in a recent article. This clearly indicates the biological assets were not available for recognition in 2024, and such assets are expected to be reported in future financial year once operation commences.
Hello! Next, let's look at how FNN applies MFRS 140 to its investment properties for financial year 2024. FNN uses the fair value model, meaning properties are initially recorded at cost and then remeasured annually at fair value. Any gains or losses from revaluation are recognized directly in the profit or loss statement. A building was reclassified from PPE to investment property during the year, resulting in a revaluation gain of 2.28 million ringgit. In short, FNN complies fully with MFRS 140, strategically managing the property asset to generate rental income and unlock long-term value.
In this part, I will explain about MFRS 137, provision, contingent liability and contingent asset. First, let us look at provision. Provision is recognized as liability when there is a present obligation and the amount can estimate it liably. For an example, FNN company reported an employee benefit of 12.49 million for long-term staff obligation. Next, contingent liability. Contingent liability not recognized in financial statement unless they become probable and manageable.
Now, I will explain the disclosure of non-current assets in FNN financial statement. FNN reports several categories of non-current assets, including property, plant and equipment, such as land, building and machinery. These are measured using the cost model and depreciated over their useful life. Second, right-of-use assets are recorded for this contract, including leasehold land and rented building. These are also measured at cost less depreciation. Third, intangible assets include software, trademark and goodwill. Goodwill is not amortized but tests annually for impairment. Others, like software, are amortized between 2 to 10 years. Lastly, investment property are measured at fair value, including commercial building and warehouse.
My name is Rajano Parahain, and I will talk about a critical appraisal of FNN Berhad asset valuation and how current economic factors have influenced its asset management strategies for the financial year 2024. Let's begin with group's major non-current assets. The largest category is PPE, which includes 13 manufacturing facilities spread across Malaysia and Thailand. This form the operational core of their beverage and dairy manufacturing lines. They also hold right of use assets, reflecting lease agreements under MFRS 16. Now, let's look at how macroeconomic factors affected their asset strategy. First, inflation. High inflation drove up input costs such as raw materials, packaging, and logistics. FNN responded by enhancing cost efficiency, especially through its vertical integration initiative called FNN Agri Valley, which focuses on fresh milk production and supply chain localization. Second, interest rates. Interest rates remain high in 2024, increasing the cost of capital. Despite this, FNN improved its debt-to-equity ratio from 23% to 21.3%. This suggests prudent financial management with controlled borrowing and likely preference for fixed-rate instruments. Third, market volatility. Volatility in currency exchange rates, especially between ringgit and Thai baht, pose challenges. However, FNB's wide export network generating 1.1 billion ringgit in revenue across 93 countries helped them cushion this impact. In 2023, the company had a fixed asset turnover ratio of 3.39, but in 2024, the ratio slightly decreased to 3.26. This small drop is not a serious problem, but it shows that the company is not using its asset as effectively as before. One reason for this could be that FNN bought new fixed assets like new machines or factories. But these assets may not yet be helping to increase revenue because it takes time to see the full effect. So in general, the company is still in a stable condition, but it should monitor how well the assets help in the future. Moving on to the non-current asset turnover ratio. This ratio remained quite stable, dropping only 0.01 from 2023 to 2024. Company kept a consistent level of efficiency in using its non-current asset to generate revenue. This is not a bad sign, but it shows that the company should make sure new investments are used effectively to help increase future revenue. In 2023, the non-current asset to total asset was 0.51, and in 2024, it went down a little to 0.52. This means the company now has a bit more current assets like cash, stock, or money to collect, and a bit less non-current assets like buildings or machines. It may also mean the company is trying to rely less on long-term assets. Even though the change is small, it can be a good sign if the company wants to stay flexible and improve its cash flow. I think that's all from us. Assalamualaikum and bye everyone!